Good afternoon, everybody, and welcome to another of Truth's webinars. We're delighted to have you join us again today. Today, we're going to focus on something very, very particular to the way we help our clients, and we call it the Blueprint for Success for Loyalty Programs. We use this framework effectively for helping clients create a loyalty program or actually assess an existing loyalty program. So we hope you enjoy the content. We've got some nice little case studies and we'll take questions at the end. So I'm going to share my screen with you and switch off my video so you get the full screen, and I'll talk you through this and then obviously happily take questions at the end. So please load the questions into the question box. Okay, so let's share the screen again. Great. So the 10 key success factors that we really frame a lot of our work around. Now, these obviously can change, and there are more, but I think the 10 most critical ones are shown here now. So we show simple and transparent as the first one. Secondly, visibility. Thirdly, engagement. 4, seamless experience. 5, loved by your people. 6, matches your brand values. 7, program rewards. 8, redemption. 9, insights and KPIs, and 10, incremental performance. So let's go straight into it. So simple and transparent, we absolutely swear by this in a sense that there are so many programs out there that do get this right, and there's so many that don't get it right. So in our loyalty white paper that we take from the research from BrandMap, one of the questions that we do ask is, why don't South Africans use loyalty programs? And actually some of the results that come up there relate specifically to simple and transparent. So you see here that 15% of South Africans who were surveyed said they are too hard to understand, and 8% said they are too much hassle. And both of those lend themselves to whether it's simple or whether it's transparent. We see here a beautiful quote from Bond Brand Loyalty from Canada. Ease of and use of redemption is actually more important than the actual reward. So yes, they're talking about redemption here, but it's actually the simplicity of the process and the simplicity of being able to redeem your rewards that actually means more than the value, the monetary value of the reward. I've got an example here of a tiered-based program that typically bring in extra complexity. But that doesn't mean they can't make an effort to bring you more simplicity and transparency. So this is a little dashboard from the eBucks program, and they've introduced their orange minion in the middle of the page to talk to you, to explain your reward level. So you'll see here, I'm on reward level 2. My eBucks discount is 10%. So it's very clear what's happening. I wouldn't say it's the simplest of programs, but the transparency is key, particularly in a tiered program or a multi-partner program. And eBucks, particularly in the last 5 years, has gone from potentially being very complicated and maybe never not trying to be not transparent, but actually sometimes it's difficult to find the rules in the past. Now they actually help you with a little minion, the little questions, the little prompts to help you get to really understand their program and help you get to move to the next level. The second key point in our blueprint is around visibility. What we mean here is very simply is your loyalty program almost an afterthought, or is it something that is extremely clear to your customers? So you'll see here 2 examples. One is a petroleum forecourt where you've got the relationship between BP and Pick n Pay, and the loyalty program for the BP forecourt you can see here is the Smart Shopper program, and you can't miss it. It's clear, it's visible, it's great to see when you're there. And on the right, you've got a little table prompt actually at the Vida Cafe, Vida e-Cafe, where you cannot miss the fact they have a loyalty program. They encourage you to download the app to do so much more other than just rewards. But the very first output of the app, if you see here, earn 5% back on every order. So the visibility is very important. But don't limit this just to your store environment or forecourt environment. Online is equally important. Often loyalty click-throughs are lost on a website or an app. They tend to be sort of hidden. We need to be clear. So the customers here in Dunkin' Donuts on the international program, you'll see very visibly on the homepage, you can't miss it. It's all about their loyalty program, the DD Perks program. This is a great case study. I won't tell you which brand this is. It's actually not a South African brand, but this is a case study of before the in-store visibility was put into place, before the in-store launch was put into place, the soft launch saw an average run rate of less than 1,000 signups a day. This looks like it could be a COVID-19 graph, but let's back to more serious affairs. But what happened is, you'll see where the red line is, that there was actually the full marketing launch in the store, and you saw straight away, certainly for the first week, that there became 5,000 signups per day. So just by where your customer is walking and using your brand and thinking about your brand, you have to be extremely visible. And we've used one of the longest standing programs in South Africa here as an example, the Clicks Club card. As you walk around their store, still 25 years on, you cannot avoid the fact that there is a loyalty program. You see it everywhere. It's certainly not hidden, so it's very visible. Our third point is about engagement, and any of you who know us at Truth, we feel passionately about how you engage with your customers is actually the real success for your program. And other consultants as well quote such stats. So fully engaged customers are delivering a 23% premium over the average customer. And that's in terms of share of wallet, profitability, and overall in revenue. We've used Pick and Pay here as a case study of how engagement is mission critical for their program. Because yes, they give away points in the store, they give away discounts in the store, but now their engagement process about bringing you personalized discounts to your Smart Shopper card is extremely important and a big part of their loyalty strategy. Now, this takes data in order to be able to do this, and you'll see this stat here is showing 87% of members, loyalty members, are actually okay with you tracking what you're doing in terms of spend or behaviors if it brings you a more personalized rewards and experiences. We also saw in the South African Loyalty White Paper from the brand map data, the same impact. A big proportion of customers were okay with their data being monitored so long as it brought them a better, more personalized experience with that brand. So this leads nicely to seamless experience. And what we mean by that is, well, at the end of the day, does the loyalty program introduce friction into your relationship with the brand, or is the whole loyalty experience simple and seamless, effectively, frictionless? And it has to be. So good customer experience drives customer loyalty, and companies that deliver the better customer experience will retain more of their customers. And through that retention, get more incremental purchases and more positive word of mouth. This is a great quote. Loyalty is a genuine emotional attachment that occurs when your customers appreciate the value of your product or service, as well as the way you deliver it. So the seamless experience in terms of how you deliver it. So we wanted to just showcase here the Checkers launch, and they're still obviously gaining traction in the volume of their customers, how seamless their sign-up process was. They even see in their quote from Neil Schroeder, with the Extra Savings launch, we prioritize a seamless digital sign-up process and the speed and channel choice for the customer. What I'm going to play for you now, we had the privilege of interviewing Wendy Nola on one of our webinars a few weeks ago. She's a very well-known consumer journalist in South Africa, and she talks about the power of the seamless experience for loyalty programs.
Definitely seen as the loyalty landscape has evolved, that ease of use has become huge. So people don't want to jump through too many hoops. They don't want to walk to a machine and then get something downloaded and then, you know. So I think the ones that make it as seamless as possible and that give consumers the Boncella, give them that prezi in the moment in cash or whatever way they want it at the till. It requires that where they are anyway. It stands to reason that those are going to be the ones. They set the benchmark now, so it makes them less tolerant for more hoops from other loyalty programs. And you can see, I can certainly see how the ones that got it right are now influencing the rest, which has been lovely to behold. And ease of use. So really try and think of it. This sounds so simple, but I can see in practice not always taken on board. Is just put yourself in the role of the consumer, take yourself out of that boardroom and out of what you're getting out of the program and what you're hoping to get, and think about how it works for the consumer especially in terms of redemption. And look at your redemption rates and see if there's something you can be learning from them. Because if you're not looking at it from the consumer's point of view, then your competitors are going to get ahead of you. Definitely seen.
So Wendy's a super big fan of the seamless experience, and we do actually quote her in this next section as well. So number 5, loved by your people. So this, again, we have had the honor of working with a lot of great brands in South Africa and internationally. And we've actually seen loyalty programs succeed in their launch or not succeed to their own KPIs or expectations due to the amount of investment effectively in their people at launch. So we've seen brands, we've worked with them where they've truly invested with promoters and training and incentives and so forth for the launch of their program, versus brands that have just sort of launched it without the training, without the internal communications, and have been disappointed that their staff haven't embraced it. So effectively, you need your staff to embrace it, you need your staff to understand it and truly believe in it. And at the end of the day, they are the front line of your brand and the new loyalty launch. So if you're investing money into the launch or relaunch, please also invest into your teams who have to deliver it. I'm going to use Wendy's video again because she talks through the case study here of how this didn't happen and what a missed opportunity.
Whenever you shop there, they say, do you have a whatever card? And I say no, because I long story short, I didn't really fancy joining. But since lockdown, since March, I've been to, I don't know how many different ones in the area, and we say no, and not a single teller has ever said, would you like to be? Here's the thing, and this is how you do it. And I just think, what an unbelievable waste of lost opportunity. I mean, It's just like almost, well, if you haven't joined our club already, well, sorry for you.
So what we always used to say when I was an executive at Woolworths many years ago, and we always used to say that actually you need and I think many of you, if you shop at Woolworths, know that you actually can't get past the checkout process without you have a MySchool or a Woolworths card. And the key, however, isn't just asking that, exactly as I don't actually know which brand Wendy's referring to there, she didn't tell us, but the key there is to follow it up with, well, look how easy it is to get the card and to receive the benefits, and to try and get the benefits across at that critical point in time, which is often very time pressured. The 6 points we want to highlight is, does the loyalty program match your brand values? So your brand clearly stands for something. You, I'm sure, through a marketing department, spend an awful lot of good investment in your brand values. And along comes a loyalty program, and it needs to sit beautifully within your mother brand. It can't be a juxtaposition to your main brand. This actually is relatively straightforward if you have a single, simple program, a closed loop program, but it becomes more complex when you start to bring in partners. So if we look at what we term the 10 Ps of marketing, so you've got your traditional 4 Ps of product marketing and the 3 Ps of service marketing, your marketing departments and your strategy effectively will be teasing this out endlessly, just maybe not terming it the Ps of marketing from the textbook. And we've added in the 3 Ps of truth customer loyalty, where we talk about the program, whether it's a loyalty program or a CRM program, the customer promise, so does your program deliver against its promise and the promise of your broader brand, and the ability to use, obviously behind the scenes, the data to offer a personalized experience for your customers. So all of this plays to the broader brand values of your brand. So what we're showing you here is structures of loyalty programs. And actually, if you are in the closed loop type program like a Vida e-Cafe, it's actually terribly simple to keep the loyalty program on brand with the mother brand. And you saw that maybe in the table talker I showed you in the visibility section. But the minute you get into multi-partner, which might be a coalition program, you might be a player, for example, brands might be playing in the ABSA rewards program or the F&B eBucks program, where typically in a banking environment, they bring in brands to play within their program. Or a partner program, for example, a relationship between a British Airways Executive Club and Avis Car Rental, where they complement each other. You see that in these three structures, it's much more complicated to get the matches your brand values perfectly right, because the right commercial offering and potentially the deepest discount to your members might be slightly off brand. So it's just something for you to be aware of as you start to bring in many partners into your program. And there's very few programs now, very few that are purist closed loop. We see across South Africa, particularly, an explosion of multi-partner activities to bring better value to the customer base, which at the end of the day is a good thing. Program rewards, effectively here, you obviously are offering your customers something. Why else would they join up? So it could be that you're rewarding them for their transactional behaviors or their non-transactional behaviors. So some customers are super happy to do this, others less so. But what we do see is a lot of consumers, this is an international statistic, but customers are very happy to do other activities to earn more rewards effectively. So we do see that in, there's a couple of programs I wanted to highlight, and they both actually sit within the insurance space. But if you look at Old Mutual Rewards, they offer rewards for financial service behaviors and filling out questionnaires about your financial history and allowing a financial advisor to come and talk to you and so forth. And the Vitality program, you'll see that they obviously are very well known for, if you do your health checks, if you do physical activities, they reward you for activities other than spending. So this has been around in our market for a while, and other programs are starting to do it. What you see here, that one of the frustrations consumers feel about loyalty programs is you have to spend a fortune to earn good rewards. So what that then enables you to do, if you are rewarding for non-transaction, is customers can feel that, almost that feeling that they've been rewarded even before they have to spend a fortune, which is one of the frustrations. And then obviously another frustration is that the actual offers that are offered to them aren't relevant. And we talked about this earlier across whether it's the 10 P's of marketing with personalization, or whether I use the Pick and Pay example, how they're offering personalization in a form of engagement. What we see from the loyalty white paper with Brand Map is the different preferred benefits from the South African population. And year on year, we've seen, no question, that cashback and discount vouchers always dominate. And we actually don't see a great variance on this when we cut this data by different demographic profiles. And then you'll see a long sort of flat tail of similar percentages of all the different offers that customers, or benefits customers expect from the loyalty program. In terms of redemption, so redemption is a hot topic in the sense that, as you saw earlier in that quote about ease of use, actually you have to make redemption super easy, and we don't want to put hurdles in place. We'll see that non-redeemers are 2.3 times more likely to defect from your brand than those that actually have redeemed in the past 12 months. We've seen that particularly in client data. There's a direct correlation between non-redemption and attrition in the database. So why don't South Africans use loyalty programs? Back to the Brand Map study in our white paper. actually often it's stated it's too hard to redeem points. So going back to the ease of redemption is as important as the actual value of the redemption. Also the frustration around the expiry of points that leads to not being able to redeem. And if you did hear Wendy Nola's commentary with us last couple of weeks ago, she talked a lot about the expiry of points being a big frustration for South African consumers. And Andre Larisma, who spoke at our Leaders in Loyalty conference last year, he basically summed it up beautifully. Redemption should be as natural as the normal buying behavior. Therefore, excel in your user experience. So it's not just about the monetary amount you give away. Point number 9, the penultimate point I wish to cover here is the insights and KPIs that your program generates for you, or does it generate them at all? And here's a great real quote from a client of ours a few years back where they said, without using our data, everyone claims that they are the most important customer currently. I can only take their word for it, because they weren't using their customer data. So granted, you don't want to ignore less valuable customers, but you do need to understand who your most valuable customers are so that you can create powerful strategic plans to keep your most loyal customers and to give the best offers and extract the most commercial value also for yourselves. So you'll see here just some quotes that I may have shared with you previously, but in retail, typically we see top 3% of customers can give 20% of revenue. That is a very, very tested, strongly robust number that we see client on client, country by country, industry by industry. Actually, it's not limited to retail. If we look at the automobile industry, the top 20% of customers is bringing in about 69% of their revenue. And then gaming, this number came from the marketing director of MGN actually in Las Vegas, at a conference in Las Vegas, that the top 4% of their customers is yielding 58% of their revenue, which is just a phenomenal skew of their data. It's super impressive. And trust me, they know everything there is to know about that top 4%. So what I wanted to show you here is so many of our clients, top left-hand corner, feel that their data looks like this, just a big mess of individualized records, maybe duplicate records. And then with some focus, they're able to segment their data into different segments, whether it's by type of customer, how much they spend, where customers stay, and size of their households and so forth. So how you segment is an important criteria for you to understand through the insights and KPIs. And then directly underneath here, ideally what we want to achieve personalization on an individual level is to achieve the ability through your data, through your insights, to create the perfect little offer for the reindeer or for the Father Christmas or the snowman. If you are just listening to my voiceover and not seeing the slide in front of me now, you think I'm crazy talking about snowmen and Father Christmas, but effectively we have to get down to an individual level of personalization. Now finally, incremental performance. Now this is a very interesting subject, because sometimes when we talk to our clients, we may go in incorrectly with the assumption that their program is to drive more profit or more revenue. And it's not always the case. Incremental performance can mean so many different things to different clients. So we effectively have learned to hold back on the assumption of what that means per client. So we've just put down for today's web just some ideas, but if we can see up to it can be higher, but in general about 4% incremental overall revenue through a really powerful loyalty program. That is, again, tried and tested, and we've seen case studies of this number internationally and locally. The previous slides I showed you were around the top percentage of your customers giving X percent of revenue. So here, top 20% of your customers should be giving you about 75% of your revenue. And this is an interesting stat, particularly tried and tested in the retail environment, where 67% of total sales is through loyalty. A few months back, we did a podcast with Jane Fisher from the Foschini Group, and Jane very openly, transparently shared with us that over 85% of the revenue through the Foschini Group retail stores, obviously they have multiple brands, comes through a known customer, either their loyalty, My TFG Rewards customer, or their TFG credit customer. And then you'll have different performance results for campaigns, redemption rates. So I've just here said 70%, which would be a great number if you're achieving that. But again, you hear brands such as eBucks claiming they have over a 90% redemption rate. So you have to set the right percentage for your brand. An activity rate, if you have a young program, you'd be expected to be up towards well over 50%, certainly. But if you have a program that's been in place for many, many years and 50% of that base was active, actually that's not too bad. But we would like to see it to be higher, obviously. And to get that number higher, you've got to do incredible engagement programs. So this is the 4 to 6% that we referred to. And these are just some lovely issued statistics on how much revenue goes through the loyalty program as a percentage of your total sales. So clicks through annual reports and so forth claim it to be almost 78%, Woolworths 76%, Sephora, the US-based beauty cosmetics brand, 80%, Discam locally 73%, Maya in Australia 68%, and previously I said 67%. So that concludes our 10 critical success factors, key success factors, and I hope the short case studies behind them prove to be useful. I just want to open the webinar now to questions. And so I'm going to switch from the screen and put myself back on the screen to answer any questions from anybody. Hi, Candice. I see you've asked if we'll be sharing the presentation. We'll be sharing the webinar with absolute pleasure afterwards. You'll get a link to the webinar where you can follow everything that we've talked about so far today. I'm going to, thank you. There was another question. It was Candice saying thank you. Whilst I'm waiting for a couple of other questions, I'm just going to go to the next slide. We have a date to announce for the industry. So on the 18th of November of this year, we're going to hold an online conference called Leaders in Loyalty. We did it last year. We had it obviously face-to-face last year in Cape Town. So the proposed agenda for the 18th of November, we will be sending more details very shortly. We will be announcing the results of the South African Loyalty Awards at the 18th of November online program. And that'll be the first thing that we do. So that'll be the first line of sight that anybody in the industry, apart from the judges, will have of the results of the South African Loyalty Awards. So we're super excited to be able to announce those as the first slot of our Leaders in Loyalty conference. And we already have confirmed speakers for the day from eBucks, Vodacom, Pick n Pay, Bondseller. Internationally, we have Weave Rewards, who are based in Mauritius, and they're the winner of the Africa and Middle East Best Loyalty Program, and they will be also speaking on the day. And then we have other loyalty consultants from the UK and the USA joining us. So we have a wonderful lineup, and we hope we'll be sending more details on how you can join the day. We have one more question here. How important do programs view the redemption to be made within their own stores rather than with external parties? Liberty, thank you. That's a great question. It's a really interesting question because it actually depends, I think, what your brand purpose of the loyalty program is. So some brands have remained very strict on the redemption of their currency and don't play in other partners or play with external partners. So for example, the Clicks Club card, you can earn points around the South African marketplace with different partners like Engine, for example, or Sorbet. You can earn points elsewhere, but the spend is, I think it's 100% or majority still back in the Clicks store. So clearly that is something they haven't wavered from. But other brands, it makes sense to actually have a multi-redemption partnership in place because maybe your brand itself is is a less exciting brand, and you want to bring some excitement and treats and surprise and delight into your program. So it actually really depends what you're trying to achieve and what your brand promises. So there's no straightforward answer, but it is definitely something that can be debated and resolved to suit what you need. The next question, how important are partnerships with other brands to create an ecosystem or platform? So Anina, thank you for your question. I hope maybe my previous answer went some way to actually coming up with that response. What I didn't touch on previously, what's important in a multi-partner environment can be the commercial impact it has on running your program, because there are very clever levers that as a loyalty operator, you can turn the dial with your partners to get great value for your members, or a fee for them to be part of your program, or a margin on the points exchange. So actually, it depends what the strategic importance of your program is, and it isn't necessarily just about the choice for your customer, although obviously what your customer experience has to be top of priority, but it can have the commercial impacts that are very interesting as well. How important is the use of cards for loyalty programs nowadays versus an app, or just running the program based on a cell number as an identifier? Thanks, Candice, for the question. That's great. It's a great question, because if you sit in a boardroom, everybody, not everybody, but lots of people have a point of view of this, and obviously just think, well, obviously everything's going digital. But I think, as you know, we run this question in our loyalty white paper with the brand map team. And surprisingly, last year, the percentage of customers still wanting a card was well in excess of 70%. The exact number, I think, is 75%, 77% even. So cards are still the number one choice of South Africans, but the use of an app and the use of a cell phone number as an identifier were approximately 20-odd% choice by the South African survey that we ran. I actually believe, though, Candice, based on COVID-19 and in the environment of less touch points, I think we have to see that number change next year. I can't imagine that it will continue with such a high percentage. I was part of a webinar last week speaking for someone else's webinar, and I talked about this, about how the loyalty card, the physical card, has almost lost some real estate under COVID-19, because when you run out, particularly I think in the early days of level 5, you'd run out to the shops and literally take your mask, your sanitizer, and one credit card, and maybe your cell phone. But you weren't taking a wallet with different cards to pull out, to touch, to have to sanitize. So let's see what the data says next time we have the opportunity to see it. Okay, do we have any other questions? I'm very happy to stay online. There's currently no more questions in the question bank. I'm going to see if our attendees, our participant number is still the same, so no one's dropped off. But I'm perfectly happy to, if there are no more questions, you're very welcome, obviously, to leave the webinar. I'll wait one more minute and then I'll close the webinar and we'll be able to send this to you. One question I'll put to everyone here who's still online is, we would love to hear from you over what you would like to get to have covered in our webinar series. We really are receiving great feedback on the webinars. We get great attendance, and we've been running them once a fortnight. What would you like us to cover? We've got some ideas, but I think it would be more important that we actually listen to you. So yeah, please let us know. You just drop Lauren or myself at amanda@truth.co.za, or info@truth.co.za, or lauren@truth.co.za, and we'll happily answer that. Anina, thank you for your question. What is next for loyalty programs? What a great question. I think one of the biggest out of the sort of out of the box thinking is how do we take the complexity of, as a customer, you've got multiple cards, multiple relationships, and how do I maximize the value for me personally? How do I get the opportunity to take away maximum value if I'm using a card here, a card there, a card in my banking environment? So I think the programs that manage to merge that value set successfully without eroding their brand value, without eroding their return on investment, but bring to the customer the ultimate customer experience, frictionless, and ability to maximize my programs, not just program. I would love to see that happen. I know lots of players have tried to make it happen, and this is more complex than just a multi-partner program. But I think that is something consumers are screaming out for. And you'll think, as it has been around for so long, yes. I mean, in South Africa, loyalty programs it's actually not one of the most mature markets in terms of time, if you look at, say, the UK or USA. But I was on a call this morning with a gentleman who runs a tech company from the US, and he was talking about how South Africa is a market, in his opinion, is a very mature market. Mature in terms of advanced, and we actually, from our SA Loyalty Awards, one of our judges was from the UK, and he and I both judge on the international international loyalty awards, and he actually said he finds he said the quality of the entries for the South African Loyalty Awards was absolutely outstanding. So we can be very proud of that. It was really nice to hear from a third party. Candice's question, if we compare SA loyalty programs versus international, is there anything that stands out as a difference or is surprising? One of the things I wish we could improve more on in the South African space, so herein lies the opportunity, is the quality and timing and ability to properly engage with the customer base. So not just maybe a couple of vouchers or not just happy birthday, is to really start to use the data in a much more sophisticated way. If you look at some of the programs that are running internationally, there's a beautiful program in SU Vodafone in the UK, and their level of personalization from a daily experience point of view, with an online interaction with rewards that are about my lifestyle, really interesting. And I think we're getting there. We're making progress, but we're not there, and there's not enough brands doing it well enough here. Okay, we still have a few people online. I'm just checking if there's any more questions or any more comments. Thank you. There's some nice feedback comments saying thank you for the webinar. Absolute pleasure. It's great to receive thanks, so appreciate it. Okay, I'm going to draw this to a close now. So thank you for attending, everyone. It's really great. I can't see all your faces, but I know most of the names behind the screen. And we'll send a link out to you, and we're glad you enjoyed it. And we'd love to see you at Leaders in Loyalty, so watch this space. We'll be sending more information soon. Thanks very much.